Hey there, Trooper Stars. Dave Schmidt here, and today we're going to talk about buy low, sell high. Stocks specifically. I'm going to give you my top 5 tips for buying low and selling high, and we're starting right now. Alright, so you want to buy low and sell high. Stocks are really attractive for doing that. In fact, stocks will be bought low and sold high. But is this really something a retail investor can do? Well, my answer is no, not really. I don't really think the average retail investor can do this realistically. But I have a feeling that if you're watching this video, you're interested in doing it anyways. You want to get your feet wet in, buying and selling stock. And no matter what I tell you, you're going to do it anyways. So, I suppose I can offer you my advice on how to do this. If you're diligent, smart, and you have a bit of luck, you may have a whole lot of success. Lately, the stock market has been, it seems like 7, 8, 9 years it's been going pretty much straight up. So, everybody seems like they're a genius right now, because if you would have bought any time in the last 7 or 8 years, you would probably be sitting pretty good right now. This isn't necessarily something I recommend, and in fact, I have another video about top 5 habits of good investors, and you can have a look up there and check it out. So without further ado, I present to you my top 5 tips for buying and selling stocks, specifically for buying stocks low and selling them high. Tip number 1, buy stocks that are out of favor. Alright, the only way to find a stock that's trading at a real value is to find a stock that is doing poorly. I mean, the reason it's trading low is because people don't like it. So you're going to have to be buying stocks that are out of favor, that are probably not worth a whole lot. Alright, real quick, I'm going to be making a lot more videos about investing and stuff like this, so please subscribe below if you don't want to miss out on any of that. Tip number 2, sell stocks that are in favor. Alright, guess what? If you have a darling stock that has went up, it's time to sell. You're going to need to sell stocks that are in favor, stocks that people love. And that's just how it is. You're going to have to be selling stuff before it starts to tank. So a side note on actually doing tip 1 and tip 2 is to follow business cycle and business sentiment. The economy and business in general sort of follow a pretty consistent pattern where there's a period of growth where eventually greed takes over and people are happy to buy and buy and buy. And as that rolls over, as the market rolls over and starts heading downwards, fear starts to predominate. And people start selling and selling quickly. So to do both those things, you have to kind of buck the trend. When it's going up, you got to sell, and when it's going down, you got to buy. Tip number 3, ignore analysts. Alright, there are 2 types of analysis in this world, bad and worse. Now, it's not that they don't know what they're doing. They certainly know more about the individual stock than you or I do. They're paid to analyze a stock, to decide whether it's worth buying or selling. The problem is, I don't feel that they actually know whether you should buy or sell it, and they certainly seem to have no idea whether it's going up or down. So, I really advise you to not take their advice. Alright, real quick, another side note. I'm going to link down in the description below to some good books that will teach you a lot on this subject. You can watch a lot of great stuff here on YouTube, but I highly recommend having a book and getting to go over it in detail at your own pace. Tip number 4, overcome your emotions. Alright, this is a big one. We're humans, we have emotions, and those emotions will run havoc when it comes to making rational decisions. When the stock market's going down, people panic and sell, and when it's going up, people get greedy and buy. And those are both things that you shouldn't be doing in those situations. One way you can kind of overcome your emotions is to have some sort of system, some sort of recipe or rationale behind your decisions that will sort of be an algorithm that you can follow for when to get in and out of the market. And just an example I'll use here is the example of moving averages. So one common method is to watch the 200-day moving average and the 50-day moving average. When the 50-day moving average crosses the 200-day moving average, that's a buy signal. So that's one thing you can do to kind of overcome your emotions, is have a set system that you follow. Tip number 5, base your decisions on fundamentals. Okay, so this one's important, and it's important to take fundamental data that's current as well as some past data and really have a look at the company and see what they're doing and where they're going, up or down. Once again, I don't know that looking at that stuff will tell you accurately where the stock price is going, but it'll give you a better idea. And I mean, that's essentially what analysts do, but it's in a lot of ways better to do it yourself. So if you're buying a company that's been consistently selling products and increasing its dividend over time, it's probably going to keep going up. However, if there's a company that's just hyped up and going nowhere, has no profits or anything, maybe it's a good time to sell it. Alright, so that's the video on my top 5 tips of buying low and selling high for stocks. I hope you liked it. Please let me know down in the comments below if you have any investment tips or strategies. I should let you know that it'd be a good idea to subscribe at this point, because in a few days I'm going to be launching a video that I feel our strategy is a little safer and more rational. What is that strategy, you ask? It's called DRIP investing, or dividend reinvestment program investing. So I'll cover that later. So stay tuned, and yeah, let me know below whether you like this video. Give it a thumb up. If you didn't like it, give it a thumb down. Leave a comment, and we'll catch you next time.